What's up, everybody? Welcome back to another Real Deal episode of the Real Estate Investing School podcast. This is your host, Brody Fawcett, and today we get to dive into a deal with a special guest, Jaden Connor. So, Jaden, excited for this one. Thanks for joining us today.
Yeah, thanks for having me, man. Excited to get into the nitty-gritty of it all.
Yeah, absolutely. And just like a quick background on you, you're actually one of our coaches at Real Estate Investing School, and you started out as a student almost like 2 years ago, right? And
Yeah, yep.
which is crazy. And you've been coaching now for how long has it been?
About the same time. Yeah, just a few months into it. So, yeah.
That's how legit you were right off the bat. So it's funny because I actually I was only coaching a few people just in the beginning, and you were one of those. I'm like, all right, you're doing things at a high level. Like I wanna be able to work with you and work closely with you and coach you. So that was super fun for me and short lived from a standpoint of just now crushing it and keep crushing it. So excited for today, man.
Yeah, well, if anything, I think it's a compliment to you, man. I appreciate it.
No, you can't spin that and give me credit. That doesn't make any sense at all. Well, dude, you just got married, and it's been fun jamming and like watching everything that you've been doing, and just kind of like your mindset around building passive income, around real estate investing, and you work in it like as your active income, your day job, right?
Yep.
And then that doesn't stop there. I think a lot of people, they're like, oh, I'm involved in real estate every single day, so I'm a real estate investor, but they don't realize that there's a difference in actively earning money via real estate and then passively earning money. Because the moment you stop right now doing what you're doing, that income stops, right? But your investments are what keep paying you.
Absolutely. Yeah, definitely. And we'll get into that a little bit in the episode as well, but I'll have a fun little example that kind of exemplifies what you're saying. So
Cool, man. Well, I can't wait. Well, for you guys that are new joining us, this is a show. We basically keep it short and sweet. We talk about one deal, and there's so much power in diving into one deal because there is a million different ways to skin a cat. And the best way to learn all these different ways and what applies to you in your situation is just learning about different ways people have done different things. And so this deal is kind of cool because last week's episode, we actually dove in with Joe Jensen. I think it was last week, maybe 2 weeks ago, and he talked about a subject to deal that he did and had kind of been on everyone's mind to kind of dive into it. And we were going through, a few of the recent deals you've done. You're like, which one should I talk about? And I thought we should do another subject to deal just because I think people have more questions and see the way that you did it versus the way that he did it, and excited to dive into that. But maybe just give us a quick 30,000 foot overview of kind of what this deal is, and then we'll dive into the nitty gritty.
yeah. So first of all, shout out to Joe. I listened to that podcast. Incredible. Like I agree wholeheartedly with everything he said. Super knowledgeable. I'm excited for the training tonight. But yeah, so this deal in particular, it's a townhome in Ogden. It was brought to me by an agent. And the originally, and this is what I wanted to talk about. So originally he brought it to me and said, hey, like, what would you be willing to pay for this cash? Because he knows, I work for an investment group and that we wholesale and all, we've got a lot of investors looking for properties. But the seller didn't have a lot of equity. And so I said, well, hey, like, would she be open to, potentially selling on terms, because we could probably get her a little bit more if we went that route. And he's like, well, to be honest, I don't really know how that works or how to structure those deals. So you'd have to kind of hold my hand. But anyway, long story short, this deal just basically fell into his lap. It was one of his clients, and he's awesome. He's an amazing agent, but he doesn't necessarily understand how these seller finance deals work. And so just like the importance of knowing how to structure these deals can be an absolute game changer. He'll still make money. We're going to pay him a commission on the deal. But anyway, that was just a side note. So it's a property in Ogden.
So back up for just a second. So this was it was a random property that just got listed. Like it was on the MLS. Everybody had access to it.
So it's actually off market. So it's one of his clients that he helped her buy. Yeah, exactly.
Cool. Okay. And it was your idea. It wasn't advertised as like, hey, they're willing to, seller finance or subject to this mortgage. It had nothing to do with that. You're just like, hey, would they be open to this?
Yeah, exactly. Because he told me I knew what she owed and I knew what she was wanting, and we definitely could have gotten her more money through seller finance versus like a cash offer. So it's
Okay,
truly going to be like a win-win scenario all around.
cool. So maybe dive into that just really quick. With we're getting deep quick, which is not what I was trying to do. But why? Just for people listening that don't understand that, like you just said, okay, we think we'd be able to get you more money. You knew what she owed. Well, somebody might be listening and thinking like, why would you want to get them more money? Isn't that make it a worse deal for you because you're paying more money for the property? How does that work? And maybe explain that. Like explain one, what did she owe and what you bought it for, and why is that an important thing to know? And then two, what next? Like once you got that point, why would you negotiate that? Why would you even want to do a subject to or creative financing with it?
Yeah, so I knew that she owed around 173,000 or so, and she was wanting to sell it for like 200,000. So she was only going to make I mean after agent commissions and everything, she wasn't going to make much. There was only $27,000 or so of margin to be had there, plus if she by the time she pays an agent and listed on the MLS and all that stuff, like she's basically not going to make any money. And so immediately the bells are going off in my head. Okay, we can pay out all of her equity in a down payment and just take over her monthly payments. She had a 2.5% interest rate. Her payment's only $1,000 a month. And so asked the agent if she'd be open to that. And he said, yeah, as long as she gets, her number. So we were able to come in with originally it was $25,000 down payment. After some negotiation, we came up 2 grand. So she's going to be getting $27,000. But she doesn't have to pay any commission because I'm going to pay the agent commission on top of that. So it'll be $7,500 agent commission. So all in like $34,500 down payment for me. But buying the property after the agent commission for 208 ish,
Uh-huh.
208 with 34,500 down, 2.5% interest rate with no balloon payment, and so she's got about like 28 years left on the loan. So we're just inheriting that loan for the rest of the life of the loan.
Cool.
And the reason why we're willing to pay a little bit more, I mean, if she listed that property on the MLS for it's not necessarily that we're paying more for the property. It just allows her to make more because if she listed that property for 200, she's going to have to pay 6% commissions out of that to a seller's agent and
Yeah.
a buyer's agent and closing costs. And by the time it's all said and done, she's making basically no money. But through this route, we're able to pay her the full 27,000 with no commissions, no closing costs. We'll cover all of that for her. So it's way better for her. She's thrilled. She's super happy. She's able to make a little bit more. And then we're also walking into some equity, like the property's worth quite a bit more than that. And yeah, she's super happy with the deal. So yeah, it's a
Yeah,
win-win
didn't
all
you didn't
around.
you say it's worth like 260 or 280? What'd
Yeah,
you say?
so probably conservatively, probably like 265
Cool.
as
So
is.
that's awesome. So yeah, man, there's a lot to unpack here because right now the reason why like this craze of like, oh, seller financing or this subject to, I love the word that you use, like inherit, right? You basically inherit the mortgage, and it's all about like creating these win-win scenarios. That's all real estate investing is, period. And you're able to do this. You essentially cut out the middleman that she was paying money to that was coming out of her pocket, and you came in and you negotiated something that made more sense for you, right? You're just literally taking over her mortgage at a low interest rate, which you said was what
Two and a
was it?
half. Yep.
Two and a half.
2.5.
So that's awesome for 28 years left on the mortgage. Like that's extremely low debt, which is really, really hard to go and find. And so for people who are listening, like the difference in a mortgage payment, probably on $200,000 on a 2.5 interest rate versus let's say a 7.5 or an 8% interest rate. I mean, I don't have a calculator in front of me, but I bet you do. You gonna pull it up?
Yeah, so like it's $1,000 versus at 7.5, it would be more like
1,800, seventeen
yeah,
hundred.
1,800. Yeah, 1,750. So
Crazy,
you're
dude.
talking $750
Yeah.
a month.
In this scenario, it's like almost double, right? And so
Yeah,
you go to look at it from a standpoint of like you're buying this property as an investment to go and rent it out. What's it going to rent for?
about 1,500.
Yeah, so this is like the market that a lot of people find themselves in right now, right? Where they're like, there are no good deals. There's no good deals because by the time I pay this amount for this property, even if I got it under asking or under what it appraised for, because interest rates are so high, and this is where I'm allowed to borrow money from the banks, it doesn't make sense. I'm losing money every single month. And you're looking at it saying, like, hey, let me come in and let me create this win-win scenario. You're getting more money in your pocket today, right? And then for me, I'm taking over this mortgage and now it's allowing me to cash flow on this deal. On top of that, you're putting less money down than the bank's going to require if you're to go borrow their money at an 8% interest rate anyways, right?
Right.
So
Right.
it's so cool. And obviously you know all this stuff, and just people that are listening though, like, it's so cool what you just did in this, the first 5 minutes of just talking about this deal. It's crazy.
Yeah, no, it's literally life changing, dude. Like so my sister, I'm an agent as well, and so I was helping my sister and my brother-in-law upgrade. They live in Logan. They wanted to move from their townhome into a bigger home. We came across a seller finance deal in Cache Valley, in their neck of the woods. It was a big, nice 4-bedroom, 2-bathroom home, and I just helped them close on it a month ago, and they got a 2.99% interest rate. We had been looking for a few months, and nothing made sense. They just couldn't afford it with interest rates at 7 or 8%. Nothing made sense. But now they're able to be in this townhome. It's like a 15-year balloon at 2.99%, and it's life changing, dude. And like I get super excited about being able to go help other people, whether it's an investment property for me or whether it's a family member like my sister and brother-in-law, or whether it's a friend or a client. Like, you need to be connected to an agent or an investor that understands the world of seller finance and subject to, because there has been, and there will continue to be tons of opportunity moving forward. And if you don't have that mindset and know how to structure or have those conversations, you need to get connected with somebody who does.
Yeah, dude, such good advice. I love that. What would you say for people that are listening? How often, with all of your experience, right? I mean, you're doing real estate 8 hours a day, every day, right? Like you, that's all you do. So, what would you say with a ratio between the amount of people you ask, like, hey, are you interested in some sort of creative financing? And that's not necessarily how you're asking it, but like, if they're interested in seller financing or subject to, or just getting creative on how they're willing to sell their property, how many people, whether you end up buying the deal and it works out or not, are open to it, would you say, with in a ratio as compared to how many people you ask?
More than you'd think, especially in this market where it's tough to sell property at 7 or 8%. I would probably say one out of every 15 or 20 will probably be open to it, maybe even less. Now, the caveat to that is the majority of them are going to want like a huge down payment, because a lot of these people have a ton of equity.
Yeah.
And so being open to it and it actually being feasible is a completely different thing. But
Right.
simply just, yeah, if you reach out to 15 or 20 people, I guarantee you'll get someone who's at least open to it, probably.
Yeah. Yeah. I was hoping you'd say that, because that's been my experience too, man. It's crazy how open people are. Like, yeah, if it makes sense. And I love the idea of like getting a yes first, and then you can work into the nitty gritty, like first it's just like, hey, if the terms aligned, and if everything worked out and you got the money that you wanted, like, are you open to carrying it? Are you open to, whatever? And it's so surprising how many people are like, yeah, if I was able to get, the money out of it that I needed, then I'm open to it. And then it's fun, because then you can be like, cool, now that you're open to it, we can figure out what's going to be important to you, what's important to me. And there's probably some, like, you think of like that Venn diagram, with the two circles and the middle's overlapping. It's like, this is what you want on the right, this is what they want. And then there's some sort of middle ground where you can come up with this win-win scenario that makes sense for both of you. And that's all real estate investing is. That's all creative financing is just figuring out what that win-win looks like, you know?
Yeah. Oh, I love it, dude. And every seller's situation is different. So like the going back to the purchase price. So this is actually abnormal. The deal that I'm doing, that I'm under contract on right now to buy, that we're talking about, it's a little abnormal in the fact that I'm walking into equity. Typically, if you're getting a decently low down payment and a 2.5% interest rate, typically you need to pay market value or above market value. This one is honestly a home run deal because I'm getting a decent down payment. It's around 13%, but it's such a low purchase price. I mean, that's only 34,500, but I'm getting a decent down payment. I'm getting a killer interest rate, 2.5%. I'm getting an amazing terms on the balloon payment because there is no balloon payment. I'm getting the full 28 years, and I'm also walking into equity. Typically on seller finance deals, you don't get the best of all worlds. Typically, if you're going to get like a huge down payment, you're going to have like a better interest rate. Or if you're going to get a little bit of a higher interest rate, you're going to have a lower down payment or purchase price. Like there's give and take with all of those different areas in terms of negotiating seller finance deals. But I'm super stoked for this one because I feel like I'm honestly getting the best of all the worlds. I mean, the seller's getting what she wants and she's happy. But realistically, I would have been willing to pay a lot more, especially since I'm walking into equity.
Yeah. Yeah. No, that's cool. I love you brought that up. And like it that comes back to like all the different reasons why people invest in real estate, you know, and we say this all the time, but like purchase price, a lot of people just look at purchase price and that dictates this is a good deal or this isn't a good deal. Like if I'm walking into equity, it's a good deal. If I'm buying it for more than what it appraises for, it's a bad deal. When in reality, like you said, that's not even like normal for a lot of these deals, you know, it's
Right.
more so along the lines of like, what does the cash flow look like? And everybody's different, right? I love the way Joe explained it too when he was talking about his, where he's like, I had the conversation with them, like, yeah, interest rates are crazy right now, you know, and it's like, yeah, they're crazy right now. And like the crazy thing is it costs me more money. And it's not even that you get to keep that more money that it costs me, you know, like it's costing me more money and it's costing you money too. Like if anything, I wish there was a way for me to pass on those savings to you and not just to somebody else. And like,
Right.
then they agree, you know, like, yeah, 100%, you know, and it's like, well, what if there was a way to do that? I could actually give you more money because there's a way I could save money by just taking over your existing mortgage.
Yeah. And that's the most important thing. Like if you're looking to do a seller finance deal, you've got to figure out what's important to the seller. What are they looking to do? Because if they have 50% equity and they need all that equity to go buy another property, seller finance isn't going to be a good option for them unless you're willing to put 50% down, but you probably aren't because it kills the deal. So, but if they don't necessarily need that equity to go do something else, then now the doors of seller finance subject to have now been opened. So you got to figure out what are they hoping to achieve, what are their plans, what's important to them out of the deal, and then just help solve their problems and solve their issue. I mean, there's a million different ways you could structure it. We could have even paid this seller an extra $100 or $200 a month. So not only is she getting a down payment, but she's now collecting an extra $100 or $200 a month for the next 28 years. You know, like there's a million different ways you can structure them. It's amazing. I love that side of the creative finance.
Yeah, dude, that's cool. What would you say? So top three things someone's like, hey, I want to do more creative financing deals. Like we've, you know, been trying to find deals recently. It's a tight market. Interest rates are high, like yada, 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 all the things you normally hear, but they're like, I want to get into this. I really want to do a deal. What would you say? Hey, these are Jaden Connor's top three. Like this is how you can go take down some creative financing deals and go invest and build passive income, even in a market like this?
Yeah, that's a really good question. So I would say number one, kind of coming back to what I said earlier, get connected with somebody who knows it. Because that's what I had to do. Like I came across all these deals, and when I was first getting into the world of subject to and seller finance and creative finance, I didn't know all the ins and outs of how to structure deals, but I had like 3 or 4 different investors that have done a ton of business. And anytime I had a question, just called them up and they would riddle off the answer immediately. And they've experienced things because, again, you can structure these deals a million different ways. And so having somebody who's gone through that is key, because if you're in a specific deal, they're maybe thinking of a potential exit strategy or a potential way to structure the deal that you've never even heard of. But if you have the ability to call them, they're like, oh, you just do it like that. And then it's like, oh yeah, why didn't I think of that? And so number one, get connected with somebody who knows it. So, and then number two, just start having the conversations. Like, the best way to learn is by doing it. And so, like, coming back to what you were saying earlier, I mean, if we just said, if you reach out to 15 or 20 people, there's a good chance somebody will say yes. Go message 15 or 20 people on Zillow or Facebook or for sale by owner, or even the MLS. Go look at properties, reach out to agents and just ask them if they're open to it, and just start having those conversations. It's just a numbers game. Start having those conversations, start, running numbers on deals, seeing what works. And then if you run into a roadblock, call your go-to guy, call me, call Brody, call Joe, call, your real estate agent, whoever it is that you want to have in your corner. So number one, get connected with someone. Number two, just start taking action, reaching out to people and just start having those conversations and running numbers on deals. I think you can learn a ton, even if you don't get a deal within the next, 2 or 3 months. If you do that every day or once a week or whatever works for your schedule, I promise you in 3 or 4 months from now, you're going to be way more knowledgeable, just because you've gone through the motions and have had those conversations and have looked at those opportunities than you were if you just don't take any action on it.
Great advice, dude. Those are we put the pressure on you and you delivered. That's I love that. Amazing 3 tips. Cool, man. Well, obviously, if people want to work, with you, they can go to realestateinvestorschool.com and come join the school. Like, the mentorship you're talking about, like, that's what we do. That's what we provide. That's why Jaden's a coach, because he knows his stuff, and literally, like, you're the one taking those calls for a lot of people and walking them through all the steps to it. So, anything else in closing that you're like, hey, this is kind of what I learned, or wrapping up this whole deal to kind of leave us with?
The other thing, I guess the last thing that I'll say is, it's such a relationship-based game. Like, this agent thought to call me. Of all the different agents that I know and work with, this agent thought to call me. And so what can you do to be that guy? When an agent or an investor or somebody else has a deal, whether maybe you're the money guy, maybe you tell them, hey, you've got a lot of capital, you're looking to invest, or maybe you know how to structure it, or maybe, whatever it is, try to find a way to be that guy, create relationships with as many people as you can. And I think you'll just be amazed. I've just been so amazed within the last year or so how relationship based it is, and you never know when the next opportunity is gonna come across your table. So I think that'd probably be the other thing that I learned, is I'm just grateful that the agent thought of me and called me.
Yeah, dude, that's such a good one to end on. And that says a lot about you, obviously. And I think, if we have more time, we could dive into, like, what are all those things that it takes to be that guy. But I think for the most part, people know, you know what you need to do to make sure people think about you, and adding that value and doing those things that you do on a consistent daily basis. So, we'll link, dude, your social media and stuff if people want to connect with you and just create those relationships there. But thanks so much, man, for coming on and sharing this deal with us. I learned a ton, and I know people listening learned a lot as well.
Absolutely. Yeah. Thanks for having me.
All right. We'll see you guys on the next one.